Hey, what's going on, guys? Happy Sunday. So today it is February 25th, and let's go ahead and talk about some of the stocks last week that quickly gapped up and became very overbought and might be due for a pullback for some of our short sellers, but also stocks that also quickly pulled on back and became very oversold. I was going to host my Sunday stock talk, but I just wanted to keep today's video short and sweet. You guys let me know down in the comment section, do you prefer these or do you prefer our live streams? And if so, maybe I'll just host one midweek. Let me go ahead and start sharing my screen. Again, all I hope is that you learned something new. My goal is not for you to see value in all of the 6 different stocks that we're going to be talking about today, but simply to cherry pick maybe 1 or 2 out of the 6 that might meet your criteria. You don't have to trade any of them. You can add them to your watch list, set appropriate alerts, and follow up with them when they make the most sense. So again, I hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing to the YouTube channel if you feel like we earned it. So the first one that I quickly want to talk about is Carvana. Carvana reported earnings, which caused it to quickly gap up. How much do you say? 32%. So the reason that I want to talk about this is not always, but anytime that there's a catalyst event like this, when it reports earnings, it exceeds expectation and it gaps up, sometimes it's viewed as an overreaction. We talk about this when it comes down to the reversals. There's reversals when something sells off and then recovers, but there's also reversals when something gaps up and then corrects itself on the way down. For short sellers, these are great opportunities to make money as this thing begins to sell off. If you're an absolute beginner, maybe short selling is not something that you want to get into just yet, especially if you don't know how to take profit or manage risk. But from where we're at right now, if this thing does retrace back down to the moving average, it offers a 21% return. Now, again, there is no confirmation of this reversal happening. It's still holding very well, but it's going to be very interesting to see, depending on how Carvana trades, depending on how the market begins to trade. If we begin to see some selling pressure and some lack of support, meaning that we begin to see lower lows and lower highs, that would be the confirmation that I would need to potentially entertain the idea of opening a short position on Carvana, because there is so much downside potential for this thing to pull on back based off of its earning reports. Now, again, this thing does not have to pull on back, right? It could continue to rise higher for longer. But just like many times when something gaps up, it takes some time. And then when it begins to sell off, it's very clear that, we break below EMA, we begin to see that selling pressure. And just like we talked about it, when it comes down to these reversals, it's just the opposite, right? There's the gap up, the consolidation, and these are days, right, that it takes for it to sell off, test EMA, and then finally break below and actively begin to sell off. That's when I want to choose to short. So there's nothing wrong with adding something to your watch list, setting appropriate alerts. But as of right now, I just wanted to talk about it because it was a little bit more on the overbought side. The other one that I want to talk about that aggressively pushed up, if I'm not mistaken, it was SMCI. I actively shorted this one on Friday of last week. I had one of my bigger days short selling this company. I do want to let you know that the last time that it sold off, it did find a support right around the moving average. So you want to be very careful with this, because if NVIDIA or any type of AI stock then begins to recover, this thing is very hyped up, right? So it tends to overreact. So if there's any form of good news, this thing quickly can begin to recover. So if you're newer to short selling, this is probably something that you want to stay away from. But again, the reason I'm talking about it, it's very overbought and there's huge downside potential based off of where we are right now and previous lows. If it does retrace back down to the moving average, which is right around $530 a share, it offers about a 37% return from where it currently sits at if it breaks below EMA and then sells off down to that moving average. But again, it doesn't have to break below that EMA. It doesn't have to continue to sell off. It's just an idea of, hey, if this is something that maybe meets your criteria, you want to add it to your watch list, set appropriate alerts, let's follow up with it when it makes sense. The other one that I want to talk about that gapped up, and rightfully so, this one earned it. This is NVIDIA. Some people view it as it might be overvalued. It's an overreaction. This thing might be the only thing that's carrying the market. But nonetheless, NVIDIA reported better than expected earnings and it gapped up. It traded at one point over a $2 trillion market cap and now is trading at around $780, $790 a share. It's pretty overbought. So I want to share this with you. Because of how overbought it is, we cannot be surprised that if this thing does begin to pull on back, it will most likely drag the most of the market down with it. So again, Just like when it has strong rallies, it brings the market up with it. You can't be surprised if it begins to pull on back, that it drags the market down with it. So if you begin to ask the question, oh my God, why is the market selling off? Pay close attention to those big 7 companies that pretty much make up 75% of the overall market, right? And NVIDIA is definitely one of them. So I just wanted to talk about it because it reported earnings and went from lows of, what was it, like 670, 680, all the way up to highs of around $800 a share before indicating some signs of a pullback. So now I want to talk about certain stocks that sold off, right? We talked about 3 stocks that gapped up. Now let's talk about the first one that sold off. So the thing that I want to first bring up with this is that the cheap can always get cheaper. I've made this mistake very early on when I first got started in the market and thinking that, oh, I just have to buy the dip and this stock is going to recover. No, the stock can continue to sell off. And the concern with when it comes down to Lucid is that Lucid, although it did sell off a lot, right? So from previous highs to current price points, it's down about 20%. That's great because a lot of you guys might be like, okay, I'm just going to buy the dip and then it's going to recover and I'm going to make 25%. That would be amazing. In a perfect world, yes. But guess what? First, the cheap can always get cheaper. And second, this thing is trading under a $5 price per share. So the risk of this thing getting delisted under the the NASDAQ requirements is there. So I wouldn't be surprised if Lucid announces a reverse stock split in the next few weeks. And the reason I say that is because of how cheap the price per share has become, where it can be considered almost a pink sheet stock, a penny stock, right? And although it still sits at nearly a $7 billion market cap, its stock performance has not been doing well. And again, looking at the overall bigger picture, lower highs and lower lows. So if it does announce a reverse stock split, I can make a whole separate video on that within itself of what that means and how the market might react. But it's normally not a good thing because it's pretty much just trying to artificially change the visual price per share by reducing the shares available. And again, I can make a more specific video on this, but I do have a video already in the LPP lesson library, which is the second link in the description down below. But I wanted to talk about it because some people do like to just buy the dip. And if the market, if Lucid does just begin to recover, then great. At least you're aware that it was oversold. And if you get that confirmation of, hey, maybe it begins to trade above EMA and indicate signs of an uptrend, then I can see why we could entertain that. But as of right now, Lucid is still bearish. It's still selling off and the cheap can always get cheaper. If there's no proper indication of something still selling off, then I wouldn't be too worried about trying to buy the dip if the dip can keep dipping. Make sense? Let's go ahead and move on to Rivian. Rivian was the worst of the two when it came down to EV companies that sold off due to earnings, a 38% loss. Although Rivian is still sitting at a $9.64 billion market cap, as you guys can see right here. It's sitting at a $10 price per share. It also has not had the best performance. If you look at the past year to 2 years, you could see lower highs to lower lows. This is a great reminder on why you don't always just want to buy the dip on a stock because the dip can keep dipping. But sometimes when things like this do happen, they do try to recover. But just like last time, when it sold off, it found its support. It rallied for a little bit, but then quickly returned to its previous direction. Bearish stocks are very risky. So with these, I would be very careful trying to force an entry, especially if your criteria isn't met. The best analogy that I can give you, and I share this with my LPP team all the time, is imagine yourself as someone that's learning how to swim. Let's say that you're a mile away from shore. Do you think that it's going to be easier to swim with the current of the waves or against it? So if the waves are going with you, it's probably going to be easier. If the current is going against you, kind of like one direction is going against you, then it's probably going to be more challenging. Not impossible, but you're simply putting yourself in a condition, in an environment where it's going to be more challenging to just make a profit. So I just wanted to share that with you. But again, a lot of you guys liked the video that I uploaded last week when it came down to talking about oversold companies. So I thought that I would bring this one up as well. And then this one also was a very popular one that was requested for me to break down. And this is Pawn W. So Palo Alto reported earnings from highs of 370, sold off and crashed to lows of 260. It's testing the EMA, so there's no confirmation of this reversal. But as you can see, a huge sell-off, 28% drop. drop, which means when something loses that much, and if it does begin to recover, there's a 31% ROI potential if we get confirmation of this thing breaking above the EMA and actually indicating signs of an uptrend. This thing does have a better track record based off of the other stocks that we talked about, of showing signs higher highs and higher lows. And out of all the stocks that we talked about today in this video, this one's my personal favorite. You guys let me know down in the comment section which one is yours, but also I'm a big believer in sharing ideas. So if there's a specific stock that you would like me to break down, maybe I could even make an exclusive video just for that on my next YouTube video. Comment down below, share with me why it is that you see value in it. And if I see enough value in it, maybe I could include it in my next video. So I really hope that, again, maybe one out of the 6 different stocks that we talked about today were something that you saw value in. And if so, please drop a thumbs up and subscribe. I also do want to remind you that our Corvette C8 giveaway is coming to an end for prize week. So today is the last day to enter this Corvette giveaway during prize week, which means every order gets either one of these prizes or gets cash in the order. So you can have one order, you can have 5 different orders, but every order does get a prize and every order does get entered automatically. 5x entries for the Corvette C8 giveaway or $50,000 cash. And again, it's super simple. You can select your favorite items from the Corvette collection. It could be the Wall Street collection, the Elon Musk go F yourself vintage tee. You can buy trading mouse pads, trading art. We even have a whole different line of apparel. You can literally buy anything, and every order that you place gets you automatically entered for a chance to win that Corvette, but also gets you a prize if you enter by tonight at midnight, February 25th. So I hope to see you for our live trading session tomorrow, and if you want to tune on in, that's going to be that second link in the description down below. So if you have any questions, comment down below, and if not, hopefully I'll see you on the next one. Like always, let's make sure that we end the year on a green note. Take care, team.